In this class, we shall see the brief history of insurance sector in India. The insurance sector in India has completed all the facets of competition, from being an open competitive market to being nationalized and then getting back to the form of liberalized market once again. The Indian insurance sector, before the nationalization of insurance in the year of 1956, due to some discrepancies, problems with the insurance companies, it was nationalized, and now again it is getting back to the form of a liberalized market once again. The history of the insurance sector in India reveals that it has witnessed complete dynamism for past 2 centuries approximately. So in India, insurance sector has with the dynamism for last 2 centuries. With the establishment of the Oriental Life Insurance Company in Kolkata, Oriental Life Insurance Company in Kolkata, the business of Indian life insurance started in the year 1818. So the Oriental Life Insurance Company was started in 1818, and it started the life insurance business in Kolkata. Now we shall see what are the milestones in the Indian life insurance business. In 1912, the Indian Life Insurance Assurance Company Act came into force for regulating the life insurance business. 1912 Life Assurance Companies Act came into force for the regulation of the insurance activities, for the regulation of the business of insurance. In 1928, the Indian Insurance Companies Act was enacted for enabling the government to collect the statistical information on both life and non-life insurance businesses. Before 1928, the act regulated the companies, but the act was not given the chance to collect the statistical information from such companies. So in 1928, The act was Indian Insurance Companies Act was enacted for enabling the government to collect statistical information on both life insurance as well as non-life insurance businesses, that is general insurance businesses. In 1938, the earlier legislation consolidated the Insurance Act with the aim of safeguarding the interests of the insuring public. In 1956, $245 Indian and foreign insurers and provident societies were taken over by the central government and they got nationalized. LIC was formed by an act of parliament, that is LIC Act 1956. So nearly 245 Indian and foreign insurance companies and provident societies were taken over by the central government and they got nationalized. And LIC was formed by enacting the parliament as LIC Act 1956. It started off with a capital of 5 crore, and that too from Government of India. The share was from Government of India. So it started with the initial capital of 5 crore rupees that was procured by the Government of India. The history of general insurance business in India can be traced back to Triton Insurance Company Limited, the first general insurance company in which was formed in the year 1850 in Kolkata by British. So the first general insurance was started with the Triton Insurance Company Limited in Kolkata. It was started by the Britishers. Yes. Now we shall see important milestones of general insurance. 1907, the Indian Mercantile Insurance Limited was set up, which was the first company of its type to transact all general insurance business. All type of general insurance business. It was started in 1907 and in 1957 General Assurance Council, an arm of the Insurance Association of India, framed a code of conduct for guaranteeing fair conduct and sound business patterns. The council, the General Insurance Council, an arm of the Insurance Association of India, framed the code of conduct for the insurance companies to execute the sound business patterns, to follow the ethical business patterns. In 1968, the Insurance Act improved for regulating investments and set minimal solvency levels, and the Tariff Advisory Committee was set up. In 1972, the General Insurance Business Nationalization Act 1972 nationalized the general insurance business in India. But in 1956, only life insurance was nationalized. But in 1972, the general insurance business was nationalized. And with effect from 1st January 1973. Nearly 107 insurers integrated and grouped into 4 major companies. They are the National Insurance Company Limited, the New India Assurance Company Limited, the Oriental Insurance Company Limited, and the United India Insurance Company Limited. GIC was incorporated as a company. Yes, now the insurance industry as on 1/4/2000 comprised mainly 2 players. They are life insurers, LIC General Insurers. First one is life insurers, Life Insurance Corporation of India, General Insurers, General Assurance Corporation of India. With effect from December 2000, a national reinsurer GIC had 4 subsidiary companies, namely. So from this yes, so shall move from 2000, December 2000, the GIC had 4 subsidiaries. One is Oriental Insurance Company Limited, the New India Assurance Company Limited, National Insurance Company Limited, United India Insurance Company Limited. These 4 companies are the subsidiaries to the General Insurance Company. Yes, now with effect from 2000 December, these subsidiaries have been delinked from the parent company and made as independent insurance companies. The insurance sector in India is governed by Insurance Act 1938, the Life Insurance Corporation Act 1956, and General Insurance Business Act 1972, Insurance Regulatory and Development Authority Act 1999, and other related acts. So, there are three, four acts, important acts of insurance business. One is Insurance Act 1938 and Life Insurance Corporation Act 56, General Insurance Business Act 1972, IRDA Act 1999. With such a large population and the untapped market area of the population, insurance happens to be a very big opportunity in India. Insurance sector has become a big opportunity for the marketers. Today, it stands as a business growing at the rate of 15 to 20%. 15 to 20% annually. There is an increase of 15 to 20%. Together with banking services, it adds about 7% to the country's GDP. So it's the most important aspect of the GDP, that 70% of the GDP is from insurance sector. In spite of all this growth, the statistics of the penetration of the insurance in the country is very poor. Nearly 80% of the Indian populations are without life insurance cover and health insurance. So, this is an indicator that there is growth potential for the insurance sector in India. There is immense growth potential in India. It was due to this immense growth that the regulations were introduced in the insurance sector. And in continuation, Malhotra Committee was constituted by the government in 1993 to examine the various aspects of the industry. The key element of the reform process was participation of overseas insurance companies with 26% capital. Malhotra Committee recommended to give the chance to the overseas insurance companies with 26% capital. Creating a more efficient and a competitive financial system suitable for the requirements of the economy was the main idea behind this reform. Yes. The main idea of this reform is creating the more efficient, and competitive financial system in the insurance business. More competitiveness among the national companies and the foreign companies. So the government nodded for 26% of overseas companies' capital. Since then, the insurance industry has gone through sea changes, enormous and and uh, big changes since then. The competition that LIC started facing these companies were threatening to existence of LIC. So these companies, after entering into our country, were trying to threaten the existence of Life Insurance Corporation. Since the liberalization of the industry, the insurance industry has never looked back and today stand as one of the most competitive and exploring industry in India. Now the insurance industry is become most competitive. The entry of the private players and the increased use of the new distribution are in the limelight today. So today, most of the private insurance companies have been doing the best business, and it stretched into the rural areas by making the insurance business so that giving the protection to the masses. Now the this kind of new distribution is in the limelight today. The use of new distribution techniques and the IT tools has increased the scope of the industry in longer run. So when the privatization was done as per the recommendations of the Malhotra committee, the private insurance agencies entered into the market and thereby posed the competition among the private and public sector insurance companies, so that the industry is in the limelight by stretching its services to the rural areas and making the awareness of insurance and the need of the insurance to everyone. That may be life insurance or maybe general insurance, the competitiveness is being increased and the threatening of the LIC is existed nowadays. After the recommendations, some recommendations were given by Malhotra committee. As we have seen, we have to see some about them. And in the year 1993, R.N. Malhotra, former governor of Reserve Bank of India, was appointed as the chairman to look into the matter of the insurance business. He recommended that there should be professionalism in the insurance sector. There should be professionalism in insurance sector. And the foreign insurance companies should be permitted by 26%. They should be permitted and should invest 26% of a capital. So he advised and recommended that professionalism must be existed in insurance business. Foreign companies must be allowed, thereby creating the sound competition among the private organizations as well as public sector undertakings of insurance. And before the Malhotra committee recommendations, there were no private players. So the committee recommended to give the permission of private players, private insurance companies, and to do the business. And the important one is IRDA should be established. It's the recommendation of the Malhotra committee. And he stressed that Insurance Regulatory and Development Authority of India must be an autonomous body, independent body, organization. And the competition must be prevailed among the insurance business. And where there is competition, he opined that there will be customer satisfaction. So by permitting the private players, foreign companies, making the autonomous body, the ultimate policy holders will be benefited. So with the recommendations of Malhotra committee, foreign capital was invited, private players were entered into the insurance business. IRDA IRDA Act was made in 1991 and came into existence in 2000. Yeah. So nearly 26% of the capital of overseas companies was permitted. Now let us move further. And the another important thing is IT tools have been increased the scope of the industry in the long run. Information technology used to strengthen the business as the IT is the growing one in all fields. The insurance companies today must meet the need of the hour for more and more personalized approach for handling the customers. If we see the policies 20, 30 years back, they were traditional. The policies were framed due to the conveniency of the insurance companies. But as the time passes, as the chronological development of the insurance business, insurance companies were insurance companies involved in framing the new policies, insurance policies, more and more with more and more personalized approach. So, as for the intentions, conveniences, needs of the customers, the policies are framed and being sold to the customers by the insurers. Today, managing the customer intelligently is very critical for the insurer, especially in the very competitive environment. So the business is with very much competition. We know all there are many companies. The customer, the consumer of the insurance, due to the technological development, due to the IT development, everybody is accessible to the information, thereby getting the information of policy details, premium details, maturity amount details, services, other services, loan facility, and surrender of the policy facility, all those things. Every customer, most of the customers, I can't say the every customer, but most of the customers are in a position to know what is the best. and they are in a position to bargain the advantages of the policies, comparing the other company policies. So, today managing the customer intelligently is very critical. For insurer, especially in the very competitive environment, not competitive, very competitive environment. In this competitive environment, the insurers must provide accurate, reliable, confident promises, assurances to the policyholders, to the insured ones. Otherwise, they go for the best option of policies which are existed in the market, which are offered by the many companies. They compare, and there is a best choices for them to take the policy. Companies need to apply different set of rules and treatment strategies to different customer segments. Yes, there are many kinds of customer segments. We know employee segments. In employee segments, topmost employee segments, IAS Group 1 officers segment, that is one. Is the middle class employees, they are second one. And low class employees, low earned, not class here means the earning capacity. So the policies must be to meet the needs of such employees, of such segments. In such a way, business people, professionals, artisans, farmers, and coolies, they're all different segments in the society. And the policies must be formulated or framed as per the needs of the people of different segments. So, companies need to apply different set of rules and treatment strategies to different customer segments. However, to personalize interactions, insurers are required to capture customer information in an integrated system. This is the most important aspect of the insurance business. Even though we formulated the policies according to the needs of different types of people, different segments of people, the companies have to personalize interactions. Insurers are required to capture customer information in an integrated system. They have to collect the information from the customers, what they want, what are their needs, Why do they do policy? What is the necessity? All these things. What is the and make the awareness among the people or segment of the people, so that if they interact, the insurers, I mean the companies, insurance companies, must appoint the persons to interact with the people to get the information to formulate the policies. In any business, customer is the supreme. We have to serve to him. We have to convince him. We have to satisfy him. To satisfy the customers, we have to we have to personalize the interviews by getting the information, what they are thinking, what they are expecting, what they are what they are expecting the benefits through the insurance. So companies need to apply different set of rules and treatment strategies to different customer segments. So to personalize interactions, insurers are required to capture information from the customers in an integrated system that should be integrated. The information must be integrated. With the explosion of website and greater access to direct product or policy information, as we have seen just now, there is the explosion of websites. Means many websites are the source of information, and they are become the greater access to direct product or policy information. There is a need to developing better techniques to give customers a truly personalized experience. Personalization helps organizations to reach their customers with more impact and to generate new revenue through cross selling and upselling activities. Yes, if we try to satisfy the customers, naturally that impact is on our insurance business. To ensure that the customers are receiving personalized information, many organizations are incorporating knowledge database, repositories of content that typically include a search engine and set the customers locate all the document and information related to their queries of request for services. In recent years, due to the artificial intelligence, the queries are solved. The queries of the customers are solved very easily, and in real time a reply is happened. Customers can hereby use knowledge database to manage their products or company information and invoices, claim records, and histories of the service inquiry. These products may also be able to learn from the customer previous knowledge database to use their information when determining the relevance to the customer's search request. So, due to the technological explosion, uh, due to the websites, very easily the information is known to the customers. With this, I conclude this class. Thank you all.